Hi everyone, and welcome to the Buffett and Beyond Stock Selection Strategy, and it's based on the book Buffett and Beyond by Dr. Joseph Belmonte. And remember folks, if you want to live on the beach like Jimmy Buffett, you really have to learn how to invest like Warren Buffett. And Buffett and Beyond proudly presents to you the good, the bad, and the ugly. And remember folks, the good stock should be in our portfolio, the bad stock should be in somebody else's portfolio, and the ugly stocks should be in nobody's portfolio. Here we are at Stock Analysis of the Week, and we're going over Amazing Amazon, and the name of that company is Amazon.com. And Amazon is one of the largest online retailers, as if we didn't know what it did. But the company opened its virtual doors in 1995. So it's a young company, folks. And sales breakdown, North America, 60% of sales, with international at 31%. And Amazon Web Services, 9%. And think of the cloud, folks. It's one of those companies that are there. And third-party sellers, which is their marketplace, account for about 20% of sales. And folks, this is so unique because through third-party sellers, Amazon doesn't have to hold any inventory, and you want to be on Amazon if you're a third-party seller. It's a place to be. And it has 231,000 employees. And folks, just to get an idea of this, we went over United Health last week or the week before, and United Health has 260,000 employees, and Walmart has over 1 million employees. So Amazon is doing so much more and growing so fast with fewer employees than most of those other companies out there. And let us look at the numbers. And the first thing we want to look at is the clean surplus return on equity. And folks, you know, to get into our portfolio, we want to see a clean surplus ROE of about 20%. And this company is just knocking it out of the ballpark. And I want to show you net income over here for 2018. That has been upped from $9 a share up to $14.09 per share. Folks, that is a big over 50% surprise to the upside. Now, it doesn't pay any dividends, which is what we like. That means this company is still growing, and it's taken all the money it earns and puts it back into the company in order to grow. And let's look over here at the earnings growth of 37% for next year, revenue growth for 23.6%. Folks, this company is firing on all cylinders, and you just can't beat this. It has low debt. We're looking at the years to pay debt. And remember that the rule of thumb under Buffett anyway is that he wants to see a company that can take its earnings and pay back its debt in less than 5 years. And this company is about half that. So all the numbers here are good, and Amazon is in our growth portfolio and has been there for a very long time, and is just doing so very, very well for us. And if we look at the returns over the past 1 year, so this is over the past 12 months, it's up 90-some or 93, 94%, while the market is up 15%. So it's blowing away everything else in its path over the past 1 year. And over the past 5 years, we see it's up almost 600%, while the S&P is up about 70%. So this stock is just doing so well. And again, looking at this clean surplus ROE, it is just absolutely amazing. And that's why we call it Amazing Amazon. Yes, it's in our growth portfolio, and it's going to stay there if it keeps doing what it's doing, folks. And remember, folks, if you want to live at the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. We had a pretty decent week this week, full of volatility, but next week will be better. So you folks have a good weekend, and we will see you next time.